Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. Last week, one of the most important event was Fed meeting, where they have announced that they are going to cut interest rate by 25 basis point. Second important aspect was that they are going to do 40 billion worth of bond buying everyone, which means that they are adding dollar liquidity in the system. Apart from that, they've given us two important aspects. One important aspect is that they are not considering rate hike in 2026. What they have said, in 2026 they will do one rate cut, and in 2027 they will do another rate cut. Net, all of this means weaker dollar. Next week there are three more central bank meetings lined up: European Central Bank meeting, Bank of England meeting, and Bank of Japan meeting. Let us understand in today's presentation what are they going to do in the next meeting and how it is going to impact dollar index and rupee. ECB meeting is on 18th of December. Ideal expectation is that it is not going to cut interest rate, it is going to hold, and that tone will be hawkish tone. Now let us understand why they will be sounding hawkish. The current inflation rate is above 2%. Historically, we have seen that whenever inflation is above 2% in 2005 and 2011, they have started moving their interest rate on an upward trajectory. Based on this, the entire market is expecting that they are going to sound hawkish. Now, what is the outlook on currency? Currently, euro is trading near 1.1750 kind of a level, and it is a strong resistance near 1.18 kind of level. If they are sounding hawkish, then euro will get stronger and move towards 1.18 to 1.19 kind of a level. In case they do not sound hawkish, then there is also a probability that it can move lower towards 1.15 to 1.16 kind of levels. Second meeting is of Bank of England. That is also on 18th of December. Entire market is expecting that they are going to cut interest rate by 25 basis point, and they are expecting that their tone will be dovish. It means that they are going to cut interest rate in 2026 also. If Now, what is the rationale behind that? Their unemployment is highest since 2021. GDP is contracting and inflation is under control. There are higher probability that GBP USD will face a resistance near 1.3450 to 1.35 kind of level, and it is going to break 1.3280. If that happens, then there are higher probability that it is moving towards 1.30 to 1.2950 kind of levels. And the last meeting will be Bank of Japan's meeting, where they are supposed to increase the interest rate by 25 basis point. Now let us understand what is the rationale behind that. Wage growth in Japan is increasing and inflation is above 2% target. If Bank of Japan goes and increase the interest rate, then in the short term USD JPY can become stronger. Strong support area is near 154.25 to 154.50 kind of level. But in the long term, as the debt to GDP ratio of Japan is on a higher side, we're not expecting that they will be very aggressive in increasing the interest rate, because of which 154.50 will act as a strong support, and likely that USD JPY should move higher towards 157 to 158 in medium to long term perspective. Now, to summarize all the meetings, impact on dollar index, broadly it is showing it will be negative for dollar, and dollar might continue to trade lower. Now let us understand what is the technical outlook on dollar index. If you see the chart is clearly showing that in 2025 dollar index remain weaker. Currently 100-day EMA and 200-day EMA is going to act as a strong resistance for dollar index, and broadly it is expected the dollar index can move lower towards 97.5 to 96.5 kind of levels in coming days. Now let us discuss outlook on rupee. There are several positive factors like falling dollar index, crude oil prices are also falling, rare is indicating that rupee should get stronger, and most of the fundamental factors of India are showing that economy is doing well. But still, the rupee is getting weaker because of FII selling in Indian equity market, and tariff pressure is keeping the trade balance on a negative side. Till the time short-term imbalances are there, pressure on rupee might continue to be there, but the pace of depreciation will surely come down. In the very short term, 89.90 to 90.10 will act as a strong support for rupee. 90.70 to 91 will act as a strong resistance for the pair. Closing below 89.80 will be the first indication of trend reversal. With this, I am ending my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.